This has affected markets. Of course, that announcement being made by China this morning with regards to the rare earth metals. Is it going to come into play? Just how much? Maudi Linzwano joins us then from Lehomo Capital and Lehomo Investments. A 1% uptick in our global market, this afternoon. Maudi, thank you so much for the time. But that China trade war situation is just spiraling out of control, isn't it?
Good afternoon, Arabile. I mean, it's unbelievable what's going on there between the US and China. Certainly very worrying, particularly for the global economy in terms of what we'll be able to achieve in 2019. I think a lot of negative impact is going to be felt if this continues. And I think you present quite an interesting angle in terms of what's happening there between US and China. And ultimately, who's going to pay the price, Arabile, is the end users, the consumers, who, as a result, if we begin to see, for example, the two technology industries between one in the US and the other one in China, I mean, ultimately what we're going to see is that the costs of those technologies are just going to be a lot higher for consumers. Whereas currently, where there's cooperation between, or previously, as there was cooperation between the two tech industries, costs were able to be driven lower. And that's why the consumers across the globe were able to benefit from such relations. So the war, it's not going to be beneficial for anybody, and it's going to be even more negative for the consumer.
Now, the Japanese market is expected to at least gain around 6% from last Friday's close if the trade war situation does end. But it's difficult to see an end in sight for the trade war situation. And it keeps going into other sectors then. And I say other sectors reluctantly because it does sort of just mean that with regards to, of course, this new situation with the rare earth metals, they're finding other ways to boost their market and perhaps get the upper hand here.
No, certainly. I mean, effectively what it does is it just shifts how goods were being moved. Instead of a straight line between US and China, it just now needs to go via Europe, for example, to get back into the US. So in the end, it's not completely shutting out those goods from entering into the US, but it's how they then maneuver back into the US. I mean, for Donald Trump to really achieve what he's trying to achieve, he will basically have to shut down everybody and all ports of entries into the US, and that's impossible. But otherwise, with the situation as it is, the Chinese goods will always find a way to go into the Europe and then back into the US. It does really disrupt just the movement of goods. It's very disruptive. It's not good at all for the global economy.
Yeah. Maudi, what sector would you say then is perhaps the flavor of the recent times, shall we say, just purely considering that tech stocks are perhaps going to suffer considering where the trade war is at? So which sector would you then go into considering that you may not have the immediate growth right now in those tech stocks?
Look, ultimately, technology, are cut across a number of sectors. So there will be a lot of sectors that are affected as a result. If there's from just purely also posing a lot of danger in terms of, or threat rather, in terms of security. We've heard that now the US has taken out or recommended that some of the support that their tech companies offer to the Chinese companies, the likes of Huawei, will be removed. And I think that will certainly pose a lot of danger in terms of just security across the globe. But there will be a number of other other sectors that are affected if the tech sector is disintegrated the way that it can potentially be disintegrated by this trade war. So I think it will cut across a number of sectors. It will make it very difficult for the manufacturing sector, for example, to move some of the goods because they rely on some of these technologies to move some of the goods, to manufacture some of the goods. Even the mining sector will certainly be affected. So there is no single sector that we can say, will not be affected. I mean, we're talking here about moving into the fourth industrial revolution. And this is the time when technology should be really taking over the globe and moving as into the future.
Maudie, that oil picture very quickly, still below $70 a barrel, some tension, of course, in the Middle East. Does that worry you in any sense? Staying below 70 is quite key here.
It does. I mean, the geopolitical tensions there, it really does. We've got oil almost floating around with that $70 a barrel a mark. It's not good, especially when you now factor in the fact that the rand has gone even weaker. We are now sitting around these weak levels on the rand. Then when you combine it with that weaker or that higher oil price, that is very bad for the South African consumer on an inflation front. And I think probably the MPC made the right decision earlier by leaving those rates unchanged. I think the rate cut will not be seen anytime soon, as long as we've got those two factors really moving against us.
Maudie, let's quickly touch on that rand picture. 14 rand 80 against the US dollar. We were at 14.40 at the start of this week. Things have certainly gone in a downward trajectory here. It's going from bad to worse.
Yeah, I mean, it's a risk of mode that we've seen it around the globe. We've seen what's happening in Europe. Also there, potentially there could be some tension there between Italy and the European Union after the elections of the new members on Sunday. Of course, they're already coming out, raising some concerns about the fact that Italy hasn't been able to stay within those limits in terms of their debt levels and expenditure. So potentially problems there in the Eurozone, but of course the trade war is the main factor there that is really making things very difficult for emerging market countries and the rand. But of course we also have some domestic issues here at home with the uncertainty around the cabinet, who's going to be in and who's going to be out. So those are some of the factors that we really have to watch quite closely to determine what happens with the rand.
Do you think the rand reacts positively dependent on who makes it to the all-important finance ministry position?
It is key. I mean, I think it's definitely going to be where the markets look closely to see who's coming into that role. I do think that the president enjoys the confidence of majority of the investors and the market, and I think they expect him to really make a solid appointment in those, especially in those economic ministries, the likes of the Minister of Finance, the Minister of Trade and Industries, the Minister of Economic Development. Those are the key ministerial appointments that I think he will make good of what he has promised. He promised a solid, credible appointments, and I think we expect that. And I think the market will be happy with his appointments.
Maudie Lentwano, appreciate your time, bud, from Lehumo Capital there, giving us that market picture. Up 1.1% there on the JSE All Share. The rand weakening, 14 rand 80 against the US dollar. Will it turn positive as we shift our attention then to that cabinet situation and the announcement? Sooner the better. That's where the buck stops this afternoon. It's back to Nzinga right after this.